Welcome everybody, Doug McKay with the M48 update on the 19th of April 2010. Three charts today. First chart is the S&P 500 cash. Looking at a daily chart, on the blog on Friday we put out a still chart. We talked about how this, we drew a channel. This trend line here was pierced on Friday, which was not a big deal provided we held that first level of support initially at 1180. If you look at my crosshairs, we've got fairly decent support at 1180. Today the low on this candle on Monday was I believe 1183. Yeah, 1183 was the low today. We closed at the upper end of that candle, almost at the high at 1197. So that's a strong rebound. We also closed either at the trend line or just above it. So technically it looks good. Now, if we approach this 1180 level again and then break it on higher volume, then we'll look to potentially hedge a percentage of our long position. But as of now, the trend is still intact, and you really never know when the top has been put in until it moves away from it for a little bit, which it hasn't done yet. So we'll see. Let's also take a look at, for educational purposes, let's take a look at a chart of RIM. And what I want to do is, we talked about how RIM was, it put in this gap. And we talked about how this gap would be filled based on probabilities. We had this big up day here on the 13th of April. We let that go because there wasn't much room to fill the gap, and it wasn't worth the risk of taking that trade based on what I could see technically. But the point is the gap was filled a little bit more than the actual gap itself. We went up, you know, the low in this candle here was 73.65. We actually got as high as 75, but we are back below the 50-day again. And I think if we break 69, 69 and a quarter, RIM's going lower. Now, when would we look to get back into RIM again? The answer to that question at this point, at this early stage, would be if we got a close above 75. At that point, we would look to get back in on the long side to RIM. But anyway, this was for educational purposes only, this gap here, to see how the gap was filled. And then the sellers came in and knocked it down. People took profit here. Okay, let's take a look and finish up with Coca-Cola. And this one we've been watching. You can find it in the table, very close to a buy point. We're looking at a daily chart right now. This was Friday when the market was weak, down $1.20. Nice recovery on good volume on Friday, or actually nice move on Friday. Decent volume again today. With a nice, basically a finish. The high today was 55.32, and that's exactly where it finished, 55.32. So we're very close on this in terms of an entry. Let's take a look at this on a weekly chart. We can kind of see the reasoning here. If we look at this little area of resistance here, that's kind of our point to get long. And if you look over here to the left, you see that same area. What we're trying to do is alleviate from this being kind of a head and shoulders. So if it breaks above this area, that will nullify the head and shoulders bearish pattern on Coke. All right, you guys, that's it. Doug McKay with the M48 on the 19th of April 2010. Have a great night. We'll see you soon. Thanks.